is to continue to be the core component for the El Paso region and fostering entrepreneurial economic development, where our existing companies are growing, where our entrepreneurs are reaching new horizons, and where our small minority and women-owned businesses are thriving and outpacing all other markets. So the benefits of the chamber include networking. Our biggest networking event is Café en Pan Dulce. You will have access to business development specialists like myself. You also have access to financing, procurement, and advocacy. And the ETA centers for El Paso Hispanic Chamber of Commerce include the Women's Business Border Center, which is the joint partnership of the El Paso Hispanic Chamber and the United States Small Business Administration. We have our Minority Business Development Agency Business Center, which is funded by the U.S. Department of Commerce and operated by the Hispanic Chamber. And lastly, we have our MWEDC funded by the U.S. Department of Commerce and operated by the Hispanic Chamber as well. I want to remind everyone, if you have any questions throughout our event, you can always leave the questions in our Q&A box down at the bottom. And if you're via Facebook, you can either send them through Messenger or in the comment box. We have our tech support on standby who will send us those questions so we can go ahead and answer any questions that you may have. And please don't forget to join us tomorrow. We have 2 of our Cash and Coins and Conversations. At 11 a.m., we have it with Weststar Bank. And at 1 p.m., we have United Bank. And like I said, let's go ahead and get started with our Guide to 2021 Tax Season for Small Businesses. I want to introduce our speaker today. We have Ms. Martha Garcia Na. She is an EA and CAA for Block Advisors. And Martha is an El Paso native who has dedicated herself to helping others to understand the tax code. As a UTEP graduate and current master's degree candidate at Grand Canyon University, Martha believes that there is always something to learn. She now begins her 23rd season of tax preparing both individual and business tax returns with Block Advisors, a subdivision of H&R Block that focuses on a personal client relationship, not only on individual returns, but specifically on the small business owner. As an IRS enrolled agent, Martha has also represented clients before the IRS in various tax matters and audits. Not only does she enjoy doing taxes, but she is a certified instructor with H&R Block teaching income tax courses for the last 18 years in various subject matters. She is also a diplomat for El Paso Hispanic Chamber of Commerce, and she won the year of 2020 diplomat. So Ms. Martha, if you'd like to take over, you can go ahead and start your presentation.
Thank you very much. So welcome everyone, and I want to thank the Chamber for inviting me to do this presentation. One thing I will tell you, I love talking taxes, so I love doing these types of presentations as well. So thank you for inviting me. Right, so again, I know you talked a little bit about me, so thank you for the great introduction there. So again, I am actually a UTEP grad, love going to UTEP, and I'm actually getting my master's degree as well right now. So definitely a challenge, but I love learning. And like we mentioned, I am a certified, instructor as well as a virtual instructor for H&R Block. So like I said, I can talk taxes all day, but I won't do that today. I don't think I have enough time to cover everything. So, but again, thank you very much. So a little bit more about me. This is going to be my 23rd tax season. Feels like yesterday, believe me. Again, I'm an enrolled agent. I have represented clients before the IRS in different tax matters. So where everyone gets very scared and terrified when that letter comes in, you have somebody to reach out to. You always go into a professional to kind of help you out with that information. And I kind of did put in a little bit of the certifications that I do have as well. So like I said, I love learning. The more I can learn, the more I can explain, the more I can teach to my clients. So I love doing that part of it. That's one of the things that I really enjoy doing. And of course, small business is one of the things that I like to make sure people are familiar with, just because of the fact that there's so many changes that come in. A lot of people don't realize the different rules, the different things, that it's very different from being an employee. So I want to make sure that I teach as much as I can. So a little bit of history about my company. So Block Advisors is a subdivision of H&R Block. So you may not have heard Block Advisors, but I know you've heard H&R Block in the past. So we are that it's been about 6 years now that we have kind of rebranded some of our offices. And I've been working at that office for multiple years, but as Block Advisors, it's been about 6. We are the largest consumer as far as a tax preparation company and have been around since 1955, along with 2 other companies that you may remember or may recognize, this being McDonald's as well as Disneyland. So we all kind of started about the same time. We've got about 12,000 retail offices nationwide. And of course, there is 334 Block offices nationwide, Block Advisor offices. And there's actually 2 here in El Paso. You'll find one on the east side of El Paso, Hawkinson, Montana area. And you also find the one on the west side around Mesa and Alto Mesa. So we're here to help you out in case there's any questions you may have. So many times you think that taxes is not something you can control. You don't know the outcome of your tax return. But in reality, you can. You can take control of that tax outcome. So I'm going to share a little bit of tips with you today so you're more prepared when you kind of come in to this year's tax season. So even though we're saying the guide for 2021, we're really mentioning the tax returns that we're going to do for last year's return. We don't know what changes are going to come for the following year. You know, we're still trying to figure out some of the ones that have come in specifically for this year. But I want to make sure and make you aware and thank you guys for joining today, because I know you're wanting to take control of that tax outcome. Be prepared when you file your taxes. So of course, a little bit to be able to get that started, you know, many of you being business owners, one of the first things that we kind of need to find out anytime you're going to get your taxes done, first and foremost, is what kind of business entity are you? So I'm going to cover a little bit about these kind of briefly, just so you kind of get a little bit of an understanding and be able to identify what kind of business you are and some of the items that you'll have to kind of consider that may be different between a smaller corporation or a sub corporation versus a sole proprietor. So again, choosing the right business is important, right? And knowing what kind of business you have. So you may hear individuals say, oh, you should have a sole proprietor. You should have this kind of business, S corporation. In reality, you really kind of have to sit down, see what those goals are for you and your business. What are you expecting? And you can switch between entities, but of course, always want to start out and know where you want to go. How's the business doing? Don't assume that, oh, I'm just trying to save taxes, so I'm going to do this one. There has to be multiple things for you to consider when you are choosing that as well. So we're going to go over a little bit of these entities. And the most common one, and many may be more familiar with, is going to definitely be kind of your sole proprietor. And the sole proprietor, again, most common, the easiest one to set up. I can decide tomorrow that I want to open up, my own business. And in that point, I don't really have to do too much. I may want to set up some different things, but I can decide tomorrow to just open up a business. Pretty easy to set up. Again, the only thing is that, there's really no protection on my personal assets from my business liabilities. So if at one point, somebody sues me for something, not only can they come after the business assets, they can come after my personal assets as well. So there are some ways that you can kind of protect your business a little bit. Again, this one being the easier one, this could definitely be, it's filed with your personal tax return. You file a Schedule C. It's a profit and loss form that you file when you're filing your individual return. Okay, so it's all combined as that goes through. One thing that comes in from this is the fact that you are also having to pay what's called the self-employment tax. And we'll talk a little bit more about this in the next kind of few slides that we're looking at. Again, whatever profit you have is going to be subject to income tax as well as that self-employment tax. Now, I know that some of you may have questions in regards to, I've heard there's this new percentage, new deduction I can take if I'm a qualified business. So we'll talk a little bit more about that. But a sole proprietor normally tends to be a business that does qualify for this qualified business income deduction. It can go up to 20%. Now, the key that I said was up to. Doesn't mean you're going to get 20% all the time. There are some limitations. There's a special form that factors in different items to see what you actually do qualify to take. And of course, the due date is normally April 15th, right? This year is coming up as 2021. But in reality, if we look at the actual tax explanation, look at IRS, it's going to tell you the tax return is due the 15th day of the 4th month. Again, since most of us are calendar year individuals, we get to kind of say, okay, it's April 15th. That's what we're used to. But there's a few exceptions to that. But most common, we're looking at that date. When we're looking at the next type of entity, you're looking at the fact that it's a partnership. So if you, let's say you want to start a business with a sibling or a friend, right? It's two or more owners. So you become a partnership, right? You're no longer individual, so you're not a sole proprietor, and you become more of a partnership. Now, this case, it's a little different. You actually file two tax returns. You're going to be looking at the fact that you're filing a partnership return, right? The 1065, as well as your individual. So we call this what's a pass-through entity. What that means is the partnership itself does not pay income taxes. Whatever profit it has or losses it has will pass through into your individual personal tax return. That's why you file two tax returns. Now, the business one here, the tax return for partnership, is again due, it's the 15th day of the third month. Okay, so we get into the technical terms. This is one of these entities that also does qualify for this qualified business income deduction. Again, up to 20%, not always the case. I've seen few instances at this point that have gone the full 20. Most of them have been limited for other reasons as well. And of course, the third one we're looking at is your subcorporation, also known as an S corporation. This one is a little similar to the partnership, except in the partnership, you do have to pay self-employment tax. S corporation, you don't. You have the income, you again pass it through to the shareholders as you know, they're listed, and then everyone kind of gets to report a certain amount on their individual tax returns. Again, this being a pass-through entity. This one is also available for you to take that qualified business income deduction up to that 20%. And this one is also due by the 15th day of the third month. Again, most common, it's going to be your March 15th. Now, again, if for whatever reason you're not able to file it on that date, you can request an extension. On certain ones, it gives you a 6-month. Other ones, it gives you a 5-month extension. And then the corporation. So of course, the corporation, this is a different form. It's an 1120 form that has to be submitted and filed. In this one, again, a lot of times the shareholders or even the kind of the business owners per se can't get paid as a W-2, as well as an S corporation, right? They can't get paid as a W-2. Sole proprietors and partnerships are not able to do that if you are kind of the business owner per se. Now, this one is not something that goes into your personal return. So you're still filing two tax returns. The corporation is filing its own separate tax return. It pays the taxes that it needs to pay. And then, the shareholder will report income coming in as either a dividend or as a W-2 that they're looking at. Now, corporation itself, the changes, it does not qualify for the qualified business income deduction. The reason behind it is because in the tax law changes that happened over a year ago, though it actually identified that the corporations would have a flat rate of 21%, which decreased from about a 35%. So they're not getting the qualified business income deduction because the income tax has already been adjusted as well. So you may be thinking, oh, she's gone over all these forms. I'm not seeing my business, right? There's one that I'm not seeing because I am an LLC. So when we're talking business entities, we're actually mentioning the fact that on some of these business entities, an LLC is actually not considered a business entity in the eyes of the IRS. The LLC is more of a state designation. So you can be a sole proprietor and be an LLC. You can be a partnership or an S corp and a corporation and have that LLC designation. The LLC just means more protection, usually, when it comes down to some of these items. So when we ask you as preparers, what kind of business are you? And you say I'm an LLC, we're actually wanting to see which specific type are you. If you're not sure, when you ask for your employer identification number, the IRS sent you a form called an SS4, and that tells us exactly what kind of business entity you are, right? So we can help you out with that. Again, this liability company, this is how you kind of protect those personal assets. When I talked about a sole proprietor, I did mention the fact that if I start my business and if I get sued, they can come after my business and my personal assets. So an LLC is kind of in place to kind of help you with a little bit of that protection, where it kind of separates those two items. Setting up an LLC, again, this one is kind of based on the state regulations. Filing fees are different for every state, and some states require a one-time filing fee. Others require a filing fee every year or every other year. Also be aware, though, that you may have to file other reports. So for example, for Texas, you have to file a franchise tax return every year, as well as I think New Mexico has what's called the gross receipts tax. So kind of be familiar that, if you're starting these, that there are other possible taxes that may need to be filed, or other forms as well. So earlier I kind of mentioned that a sole proprietor in a partnership tend to kind of go through, and they have to file the self-employment tax. So many of you may be wondering, what is a self-employment tax? Why do I have to pay this tax? Well, when you're an employee, right, you have taxes taken out of your paycheck. And from this taxes, you're paying Social Security, you're paying, Medicare tax. So, and your employer actually pays the other half. Okay, so you only get a portion taken out where your employer pays the other half for you. When you're self-employed, you're the employee and you are the employer. So for this reason, you have to kind of go through and pay these taxes as well. Again, the sole proprietor and the partnership, and in the partnership, it's what we call general partners. Okay, the ones that are kind of making the day-to-day decisions coming up. You know this as FICA, right? We say Social Security, we say Medicare. FICA is both of them combined. So this normally tends to be about 15.3% of your net profits. You take your income, take your deductions, whatever profit you have could be subject to up to 15.3%. It's not always the case. There's some limitations when your income is a little higher, right? But this is kind of the more common one, right? So don't always assume it's always going to be that amount. Sometimes if it's a little higher, you have to pay more in Medicare as well. New rules that progressed a few years ago. So one thing that has happened because of the CARES Act is the fact that obviously this tax tends to be one that sometimes people don't plan for. So when you file your taxes, you kind of pay a lot, right? You're paying that self-employment tax, you're paying the income tax. So it can be a sizable amount. So one of the things that has happened, especially with the CARES Act, is the fact that this year you can make an election. And the election allows you to defer kind of half of that self-employment tax to pay it at a later date. Okay, so it's looking at next year again. We're not always sure because some of these things come into play, but you want to be able to make sure that you can make this election. You can, again, you don't have to, you can pay your 15.3%, but if you want to make this election, make sure you let, when you're filing your taxes that election is made, because it's very important that you make the election at that time, right? So another thing that came in, and many of you may be kind of wondering about the Paycheck Protection Program, especially because it's kind of come back out. So I can't necessarily, talk about the actual protection, the plan itself. I can kind of tell you the tax side of this. So again, Congress did pass the PPP, right, to kind of make sure that individuals were kind of getting that fast, direct economic assistance for your small businesses, all right, to kind of preserve those American jobs. So it was meant to kind of help you out with the payroll, some of the paid medical leave that needed to come in, mortgage, rent, utilities were kind of the ones that were being based upon. Now, when this loan came in, or this program came in, it pretty much stated the fact that if you use this to pay for your payroll, that you wouldn't be able to take the deduction, right? Because you were kind of getting this free money per se. So a new change came in here recently, and the change is really that if you paid payroll with this program, you can still take the deductions. They will be deductible on the tax return. So it's a little bit to kind of alleviate our small businesses or our business owners to be able to kind of take these deductions, right? So making sure that you're aware of this is you can deduct it, because for pretty much all up until like December, it was pretty much said you cannot take this. Changes have been made, and yes, you can. So now you can go ahead and take these deductions. So make sure that you've saved all your receipts. Make sure that you're kind of ready to go for this part of it. So one of the things that I get a lot of questions as well is kind of, can I file my own taxes? And of course you can. Now, should you? That's a different story. So there are different ways that you can kind of go through. You have the assisted versus kind of the do-it-yourself. right? And there's different entities. You have kind of your CPA firms. You've got your tax preparation companies. I mean, no, there's more kind of in between, do it yourselves. You might have that uncle or that cousin that kind of knows how to do taxes. But a lot of times is you kind of have to go in and really kind of consider, especially this year, right? There's so many changes, so many rules coming in. You really kind of want to have that expert to be, with you. You want to have that expertise. I know as many of us preparers probably, and I'm talking as a generalized group, there's so many changes. We're trying to keep up with them. So, and this is our profession. So you got to figure someone else may not be as well versed on some of these deductions. So I always say, look for an expert. Got your CPAs. Again, you have your CPAs and sometimes you kind of look at your CPA firms. The CPA is not always the person that does the taxes for you. They have other individuals in their offices that does it, and then they review. You also have in some of the preparation companies, you also do have CPAs within that company, as well as enrolled agents like myself that we have actually been kind of had to take a test to be able to demonstrate our tax knowledge to the IRS. And of course, do it yourself. If your return is simple and you know how to do your return, you've got a W-2, you can go that route. Again, if it's more complex, kind of think about the new changes coming in. Now, some companies I know, example, Block Advisors is one, as far as the HR block goes as well. We also have kind of the mixture. You can actually go online. You can actually choose a tax preparer to help you out. So you can have the assisted one while you're kind of doing the online as well. So it does allow you to kind of give a little bit of a mixture there. But again, kind of find out, shop around if you need to, the expertise is there. What services do they provide? So do they kind of guarantee anything? So I know for our company specifically, we go through, we have what we call our peace of mind guarantee. So in case an individual is audited, then we're kind of there to kind of back them up, right? So that's where I've kind of done some of my audits is coming in from our clients that, we get a letter from the IRS, we call the IRS, we help them out, guide them through. So in many of our situations, that is something that, at times already comes in with the service already. And in some, again, it kind of varies, kind of look at the companies, kind of see what they offer. I know one of the new things we're offering this year is we used to do it only for individual returns. This year, we're adding it into our business entities as well, which includes now the partnerships and the corporations and so forth. So again, can you? Yes, you can file your own taxes. Should you? It depends, right? Let's look at the situation. How comfortable are you? Again, so many changes. I would kind of look at that expertise as well. So just a little bit as we kind of go in, what do you bring into an appointment? What do you come in to get your taxes done? Well, kind of look at some of the expenses that you can take as a business owner, right? Kind of look as we kind of go in, there's just a list here that, I'm just not going to go over everything, but, there's certain things that you have. You have your advertising expense you may have had, your credit card fees because you're accepting credit cards and, probably more this year than any other year. Those expenses can be deductible. Other items that I listed as well, equipment, right? There's the depreciation, your rent, right? So even though you paid that rent with the PPP, you are able to take the deduction. So kind of look over as far as, if you had to travel. I know this year was kind of maybe not as much. But you kind of go in and kind of look at what's there. Utilities are there, wages for your employees. Again, you've got wages, you've got contract labor. So normally the definition for deducting something is if it's an ordinary and necessary deduction in your line of work. Okay, so for example, if you're a landscaper and one of your employees ends up, has a toothache and they're just not working very well right now because of the pain, and you pay for the dentist because you want them to, feel better and continue working. Well, it's not really a necessary and an ordinary expense in your line of field. So that would not be something that's deductible. So again, each business is a little different. Again, key terms, ordinary and unnecessary expense. I listed this one here just to kind of give you a little bit of an idea. You have your employees and you have your contractors. This is one item that IRS kind of frowns upon in certain situations because individuals will pay somebody, even though they're their employee, they go through and they pay them as contractors. Okay, so just be, be leery of it. If it's something that, again, and sometimes in construction, for example, it's a common practice, because you hire somebody as a subcontractor. So just always kind of be aware there is a difference between an employee. If you're telling them when to be there, what their job performance is, they may be more of an employee and not a contractor. So just kind of be aware of it. It's more for information purposes, but you want to be able to make sure that you're kind of following the rules, not to get into any kind of trouble or anything. I also have some of the non-deductible business expenses. And this coming in again, if it's clothing, for just day to day, right? Let's say that you're wearing your business, suit, but that same business suit you can wear to a wedding, right? So now it's not considered a uniform. That is something that you can wear outside of work, so you're not able to take a deduction. I put in some items here. Sometimes you buy a gift for an associate or a customer. You can take up to $25. That's what it's limited to. All right. Entertainment costs used to be deductible. A couple years ago, they did away with that deduction. So again, some of these changes have come in. If fines or penalties, right? You were caught speeding because you were trying to get to a customer or an appointment, cannot take that deduction. So just, as we're kind of looking. I did put in as far as changes coming in. This is for 2021, for next year. So they are proposing the fact that right now you can take kind of half of the meals that you're offering, with employees. They're looking at changing part of that to actually be 100%. So we always wait. We don't always say, hey, it's a guaranteed, because one thing I will tell you, in the 23 years I've been doing this, things change. We may be showing you something right now that tomorrow can change, and we have to make it retroactive. So it's constant learning for us. So a lot of the impacts that you may be kind of wondering, I know we kind of mentioned a little bit of this qualified business income deduction. I kind of gave you a few examples coming in, but this one came in, Tax Job Act of the 2018, where it did kind of bring in the 20% for either a sole proprietor, a partnership, an S corp, coming in, that they're able to take up to that 20%. So again, most of the businesses qualify. There's a few exceptions, but again, mostly it's based on limitations, and it kind of brings in, if you're single, that's the income limitation, right? And these numbers change every year, because I know I had the previous numbers before, so they do change every year. If your income gets past a certain dollar value, you may not be able to take that deduction. But again, it kind of depends on the situation. Everyone's situation is different. One thing I would like to bring up is, if you buy equipment, a lot of times, certain equipment gets to let you take the full deduction this year. The rules that bonus depreciation, you can actually take a full deduction, or you can continue depreciating these items, based upon what we call the useful life, right? Kind of under different years as well. And again, just as a reminder, corporations, the bigger corporations, do not qualify for the qualified business income deduction because their tax rate was reduced. So it went from the 35% down to 21%, and that's why the corporations don't qualify for this, just the sub corporations, partnerships, and the sole proprietor. So again, the question comes up, especially this year, what if I can't pay that tax bill? It's a tough year. I mean, trying to survive as a business owner. What if I can't make that tax? A lot of it is, have a balance due to the IRS. Just pay as much as you can. If it
Hello, everyone. I'm so sorry. We did have a little bit of technical difficulty. Oh, there she is, Martha. You're fine. Don't worry.
Thank you.
Go ahead and take over.
All right. Thank you. All right. All right, so we kind of left it off a little bit as far as the short-term plan, right? So that's the first option for you to do. Let me a quick second. I think I'm sharing my screen. Just make sure. Okay. All right. Thank you. All right, so thank you. So again, it kind of goes in through that no fee, right? As we kind of look at that. Now, if you are not able to go through and it turns out that, you know what, can't pay it in 120 days, you can always set up a long-term installment agreement. Again, this one can definitely, it might cost you something, but normally it's not something you have to pay up front. It's something that as you're making the payments to the IRS, they will go ahead and just subtract it from that point on. All right, so there's, again, options that you do have coming up. And again, you know, always the best thing is to not ignore it. Best thing is to go ahead and try to figure something out. IRS, you know, may be willing to take in $100, you know, they'll work with you to kind of go in and make sure that you're able to go through and have that, you know, they want to get paid. So they'll a lot of times they'll work with you. Again, it's better to ask, right? And make sure that we can do that part of it. So, you know, some of these tips, of course, you know, for small businesses, and I know I've been kind of talking about a few of these, it's just the fact that, you know, for me as doing taxes for these number of years, you know, a lot of times I do say, you know, utilize a tax expert. If there's questions, you know, feel free to ask. Like I said, I know for me, if you ask me a question, you know, I'll answer the question, you know, emails and telephone calls and so forth as well. So reach out to the experts, reach out to someone that kind of knows. One of the biggest things is keep tabs of those receipts. And we're kind of looking at those receipts again. You know, sometimes individuals, I misplace the receipts, they don't have the receipts. And it's better to make sure you're kind of keeping tabs of them. You know, again, a lot of times it's not until that audit comes in where everyone's scrambling to find the receipts. And in reality, you should be ready to go. If IRS decides to audit you, you've got your information there ready to go. Don't forget, as far as we're looking at, you know, put money away into your retirement. I know this might be a tougher year to do so, but, you know, when you're able to go ahead and put something aside. Especially this year, many of us working from home, you know, as business, if you're a business owner, you are able to take that home office deduction. And again, you know, kind of track those miles and expenses for your vehicle. A lot of times those are really good deductions that if you haven't tracked it well enough, it is hard to go through and sometimes prove, right? Keep a log. That's one of the important things we're looking at. And of course, you know, you have, you know, if you're needing to purchase equipment, you know, of course, a lot of that is deductible. So take advantage if needs be. Sometimes hiring family members. I don't know if you knew, you can actually hire your teenager versus giving him an allowance. You can hire them and actually pay him as an employee. Okay, so there are some perks to that side of it because you are able to take those deductions. And again, sometimes, you know, old equipment, you may want to reconsider selling it because you may end up actually with a profit. So kind of see what we can do. Can you get a little more life out of it, or, you know, are we going to sell it? And of course, more than anything, please do not ignore any letter from the IRS. If you're getting one, please get it resolved. You know, they are one of the few entities that can come after your property. They can put liens on your property. They can come after paychecks. So don't, you know, fall into that. It's better to talk to them, make arrangements. If you were already in an installment agreement and you can't meet it, you know, you can talk to them, and a lot of times they'll go ahead and work with you. So some of the services that we provide over Block Advisors is, you know, one of the things that a lot of people that work with me, you know, most of us have more than 15 years of tax experience. Some of us are enrolled agents. One of the offices in town, you know, we have like 3-4 of us that are enrolled agents. So that's really good, you know. And then of course, at other offices, we may have some certified public accountants. I think I mentioned it a little bit. We do provide audit assistance. So if you weren't one of our clients and you have gotten a letter from the IRS, we do help out individuals as well, you know, to kind of help this. So if it comes in, if you're not one of our clients, it's okay. We kind of help out with the process. If, you know, we'll kind of tell you what we're expecting, what we're looking at, what we might need, and then you can proceed and decide whether you want us to continue in helping you with that process as well. And again, Block Advisors, you know, again, division of H&R Block, but we're the ones that focus more on the small business. So we do have some services where we can go through and, you know, kind of help you with the bookkeeping side, at least kind of entering those receipts. We've got a new program now that we can actually meet with you a couple of times out of the year to make sure you're making those quarterly payments on time too, right? So those estimated payments so you don't fall behind, because that's one of the first things IRS wants you to be caught up on when you're trying to sometimes do these installments as well. Okay, we also do payroll services. So we do the W-2s, the 1099s if you need that service, 941s, 940s. Again, one of the big things is since most of us have been around for a few years, you can usually get your tax preparer every year. I know I've heard individuals say, well, I go to this place, but I always get a different person every year. With us, normally we try to keep you with the same preparer unless you decide, hey, I want to try somebody else, and that's fine. We are open year round. So we have, if we're not open that day specifically, a lot of times we'll do open by appointment. And we actually do have capabilities of working from anywhere. So we have that option too, where we can go through and help our clients, not only face-to-face, if you want to do face-to-face, but we can also do video chatting and we can actually do returns virtually. So we've got different options for our clients as well. And one of the tools we have is we have what's called the Tax Identity Shield, which kind of helps protect against that tax identity. Where people aren't using your social to file, illegal tax returns is primarily what we're looking at. And it does kind of that black market scan as well. So I know I have mine, so definitely as well. So, I'm kind of at the end of my presentation. Here is my information. You guys are welcome to, call or email me at any time with questions, even if it's just something you're not quite sure, I can kind of guide you in the right direction at any time. Okay, so Victoria, I don't know if there's any questions.
Of course, thank you so much, Martha, for all that information. We have had a lot of questions, especially with the whole PPP and how is that going to work out with their taxes and is that going to affect their taxes? And I'm so happy you covered some of that information on there. So in regards to the PPP, I know it's going to be very complicated. It's recommended that they do it with someone who is knowledgeable on doing taxes instead of them doing it by themselves.
Yeah, so like I said, I recommend that for sure, just because, again, this change just happened. All of last year, it was pretty much stated that if you had a PPP, whatever, you received, you wouldn't be able to take that as a deduction, because in reality, you never really, if you got it forgiven, especially, you were able to go through and, at that point, you were already not paying for it if it was going to be forgiven. So when we're looking at it now, they have changed the rule and now it will allow you to go ahead and deduct that.
Okay, thank you for answering that question for us. And what about grants? Are they taxable?
Grants are not taxable.
No.
Okay, so that's the whole definition of a grant. A grant is free money, pretty much.
Free money. So, okay, so grant equals free money.
Yes.
Okay. And as far as the PPP, the second round already opened, correct?
Yes.
Okay.
Okay.
Thank you for that information.
That's where the chamber comes in.
Yes.
So they're the ones that can help you out with it.
Yes. If you have any questions in regards to the PPP, you can always call us here to the chamber and we can give you the information that we know. That's what our Cash and Coins and Conversations event's going to be. And I have a question here, Martha. It says, are my medications a write-off?
So medications can be a write-off. However, they are very hard to write off. And the reason behind it is because everyone kind of gets what we call a standard deduction. So if you're single, it's about $12,800 this year. So for example, for a medication, you would have to meet 7.5% of your income, right? It would have to go over that figure, and then you would have to bypass that 12,000. If you're married, it's like $24,800. So you can deduct it, but it's very, very tough to deduct it. So my recommendation is if your employer offers a health savings account or a flexible spending account, take advantage of that. Definitely take advantage of it.
Okay, thank you for answering that question for us, Martha. And I have another question in regards to grants. It says, if grants are non-taxable, why do some agencies ask for a W-9?
So a W-9, again, a lot of times it could just be for their record keeping, I'm assuming. So it's not necessarily my specialty, but a lot of times it's because they are required to provide, I guess they need, a W-9 gives you the person's social security number, gives you some of the pertinent information that might be needed. So it might be more for their record keeping than anything else.
Okay, perfect. And you mentioned equipment as a deductible. Can you deduct expenses from construction costs, like a new building?
So if you're looking at putting in a building, right? So you're constructing, you're making a building, right? You're actually building a building. You're able to go ahead and depreciate it. Now, depreciation means you take a little bit every year. So for example, earlier I kind of mentioned you could actually take like 100% of some of the deductions. A building would not be one of them. So anything that's considered real estate, right? Kind of building, office building, rental property. In that sense, that you can depreciate it, but it's over either 27 and a half years or maybe 39 years. So it takes a lot longer. That one's not an expense you can just fully deduct. Now, if you're making improvements, it kind of changes a little bit, but you are able to take those deductions.
So improvements are easier than a whole new other addition to it.
It depends what kind of, so if you're only making like a repair because something, there's a hole somewhere and you're fixing it, then we take that as a repair. So you're able to take the deduction. But let's say you have that hole in the wall, but you decide, you know what, I'm just going to remodel the whole thing. Now we've made it into an improvement, and that therefore it takes a little bit longer to depreciate those items.
Okay, perfect. Thank you for that. And what about equipment? What if it breaks and it's unfixable? Can you use that as a loss?
Yes. So what'll happen is if you're depreciating the item and you haven't fully depreciated it, you can go in there and say you no longer have that asset. So it seems like we use the word dispose of. So let's say that you bought it for, $3,000. You've taken, $1,000 of depreciation. So you still kind of have an investment of $2,000 and it breaks. When you dispose of it, then you're able to take that $2,000. Okay, but remember that if you depreciate it already, there's no loss because you've already taken the deduction in a prior year.
Okay, that makes sense. Okay, let me check here. Give me 1 second. What about public transportation, such as like Lyfts, Ubers, or taxis that you have to take to meetings or events that are tied to your business? Are they deductible?
Yes, they are. So if you are, for example, because normally, like, let's say you were driving your vehicle, you could take the deduction of like the mileage. But if it's just easier to, hey, I'm just gonna take an Uber, then yes, but make sure you're keeping track of your receipts.
So always just make sure you keep track of your spending.
Yeah. Yes, and I know a lot of times if you have the apps and so forth, the information is there. So always make sure you have them somewhere where you can go back and get that information. Sometimes with audits don't happen instantaneously. Audits can happen 2 or 3 years down the road. So if that's the case, you have to be able to furnish that information to the IRS.
Okay, so it's a good idea for them to keep a certain amount of years back just in case they get audited.
Exactly. Yeah. Okay. So IRS can go back, like minimum, they can go back 3 years to question any return that's there. If they feel that there might be a fraudulent issue that could go back further, then they can actually go back further. I haven't seen it happen too often, but they can.
Okay. And I have another question here. It says, I was advised not to file my first year as a business owner. How will that affect me?
I guess it kind of depends on the situation. That would be somebody, if you have that question, reach out to me and we can talk a little bit more about it, just because I guess it kind of depends of why. We'd have to kind of look and see. If it might have been that maybe you were barely getting started and you really hadn't put in any kind of, really started the business officially, that might have been the reason why. But, again, if you have questions, just reach out to me and we can kind of discuss that a little bit more.
Okay. And I have another question here. It says, I'm a service provider. A business provided a service and is asking me for a W-9. Is that something that they really need?
A lot of times, if you're providing a service for somebody, and if it's over a certain dollar value, normally that dollar value is $600. The W-9 is because they're going to be issuing you we used to call it 1099 miscellaneous. That has changed now. It is a 1099 NEC for non-employee compensation. And they are required to issue those forms out. It's a new requirement that happened a few years ago. So that's probably the reason behind it, is because they're having to issue these forms out because they're required to do so. So they'll need that W-9 to get your information from you.
Okay, so it also says they gave them an invoice of the service, but that W-9 is still needed.
It could be because IRS started getting a little pickier the last couple of years, that they did want at a certain point that you did have to issue out the 1099.
Okay, perfect. Thank you for that. Let me see. And then there's a question here that says, is my gym membership a personal or business expense?
Right. So when you're looking at it, I guess it depends, right? So it depends what your business is. If your business, for example, if you are a personal trainer and the gym membership is because that's part of it, then yes, it's a business deduction. But in reality, it's you're working in construction and you go to the gym, not an ordinary or necessary business expense.
Okay, thank you for that. And I have a question here from Ms. Gonzalez. She's asking, can I employ my 12-year-old daughter to work for me? I am a sole proprietor.
Yes, you can. You are able to. That is one of the things that they do allow. It doesn't matter her age. I mean, obviously, it's going to be something that she can do. So for example, you're not going to hire your 3-year-old to file for you, right? So there has to be some kind of sense into how you're hiring them for this. But if your 12-year-old is going to help you input, information into the computer, then you can pay them, right? Now they're an employee, so you'll have to kind of file the reports. The one thing that is when you have your children working for you, you don't have to worry about paying the unemployment portion of it in the state of Texas. Okay, so but you can employ them.
So you can, okay. And then Ms. Montanes is asking, are 1099 still over 600?
So it's required to, yeah. So you're required to issue one out if you have paid somebody over $600. Okay. That's the requirement for the IRS. Now, if you pay them less than that, then you're not required to give them one. But I would probably say, let's say it's $500, you can make the election and report it. It's just saying that it's not necessary if it's under $600.
Okay. And then Ms. Gonzalez is asking again, how do I prove I paid her if I paid her cash?
So in this case, when you're hiring your child, you have to kind of pay them as an employee. That also means that you're having to go through and quote unquote take out, certain taxes for them as well. So in this case, maybe if it didn't happen last year, maybe for this upcoming year, that's going to be something that you're going to kind of, she's your employee, so you would be withholding kind of Social Security and Medicare taxes from them.
Perfect. Thank you so much for your answer, Martha. And we have another question that says, can I deduct legal fees for changing my business entity to LLC?
Yes. Yes, that is a deductible business deduction.
Okay, thank you. And is it better to keep your own books yourself? Or is it better to do it through like a CPA?
So a lot of it again, it kind of depends. If you're able to keep up with them, you're always welcome to do so. What I have found out though is that a lot of individuals, have the intention that I'm gonna put all my receipts in every month and I'm gonna do this, and sometimes that kind of takes a back burner because you're trying to run your business, right? So what ends up happening a lot of times, you kind of fall behind. So it's really, how disciplined are you? If it's something that you're not going to have time for, it's better to kind of have a professional, do it for you. At least everything's in order. Because as a business owner, you kind of want to know where your business is at, right? You don't want to wait till the end of the year to figure out how you did in the year. So it kind of helps out to have those financial statements available to review.
Perfect. Thank you for that answer. And Ms. Montanes is asking, can I hire my niece who lives in Pennsylvania to do work out of her home, like admin stuff?
You can, you're able to do so. But again, as you're hiring them, remember that you'll have to look at kind of withholding taxes from them as well, right? They're a regular employee, you're able to kind of hire them. A lot of times age doesn't matter. You can have a 15, 16-year-old, 13-year-old doing yard work and getting paid for it, and they're required to file a tax return if they make more than $400, right? So you are able to hire, and again, just making sure that again it's something that it's a feasible job for them. Like I say, you're not having your 3-year-old filing for you, right? So, but you're able to hire other individuals.
Okay, perfect. And we have a question here that says, can I put my car as an expense? I'm not a business owner.
All right. So if you're not a business owner, then no. We used to be able to have, as employees, we used to be able to take certain deductions years ago. It's been a couple of years now that those deductions went away. So there's no longer employee business expenses that are able to take. So it's pretty much these deductions are allowed more for your business owners.
Okay. And Martha, is there any mistakes that you see that business owners could have avoided that are common mistakes for them not to make while filing their taxes?
I think more than anything, the business owners sometimes don't make those quarterly payments. So when you're a business owner, when you're an employee, someone's taking out the taxes for you. Someone's taking out Social Security. Someone's taking out, federal withholding. When you're self-employed, a lot of times you kind of tend to forget that side of it and don't set that money aside. So the biggest, I guess, not necessarily mistake, it's just the biggest issue I kind of get to see a lot of is the fact that, by the end of the year, when it's time to submit the tax return, you might have a balance due and you have no money put aside. And then now you're having to pay for the next year. So now you start getting into this little circle of never ending owing the IRS, right? So that's probably one of the things that we would look at. Other mistakes just come in sometimes with people just not holding on to those receipts. They're looking or they paid cash for something, and it's very hard to track that information. Another one I think would be that sometimes business owners commingle funds between their personal and their business. So if you have a business account. Keep, all their expenses that come out are on the business bank account, and then and then keep your personal stuff separate. So I think that's probably maybe one of the biggest things that I get to see in an audit. It's very tough to prove that maybe you lost a receipt to Lowe's, and at that time they're a little more forgiving if you've kept those accounts separate. But if it's intermixed with your personal, they're not going to allow the deduction.
Okay. And I know you're talking about the business accounts and how we said about receipts. If they use their card and they're paying for whatever expenses they need from their business account, can they use their bank statement as their receipts?
Not necessarily.
No.
So it's always better to have the receipt, just because IRS goes back in and a lot of times what they'll do is they want to see the receipt and they also want to see the bank statement as backup. But, like I said, if let's say you lost that Lowe's receipt, but you have the bank statement and everything else on that bank statement is business related, they're more willing to kind of let it slide. Not always, but it's a little easier if they can see that you're maintaining the two accounts separately.
Okay, perfect. And we have another question here as far as the PPP. It says, I heard a while back that the PPP loans were going to be automatically forgiven if they were under a certain amount. Did they ever get approved?
So part of it was that, you just had to, so that kind of went through your lender. You were supposed to kind of, put in the application, the information for them to go ahead and kind of forgive the loans.
Yes, and you are correct. The forgiveness comes through whatever lender they applied with. Yes. Okay, perfect. And Martha, I think we're going to close it with this question, and it's going to be, what can I do to simplify filing taxes next year? As a business owner, what do you recommend that they should do to have an easier process through that?
Right. So an easier process is always to kind of stay organized, right? That's the key. You've got your receipts, you've got the information. Tax rules change all the time. So what maybe was deductible a few years ago is not deductible anymore, and what comes in later, now that something is different. So again, kind of that's what we sometimes say, stick with an expert, because if you have questions, you can reach out to them at any time and ask them versus, not have, just kind of trying to keep up with your own rules. But a lot of it, the simplest thing is really kind of keeping track of your income, keep track of your expenses. And normally that'll kind of help out, as much as you can add receipts and kind of, look at it. Like I said, for me, if somebody asks me, how can I, what is this qualification or so forth, I'll sit down with you and I'll say, this is kind of what you need to deduct. So that way you're more organized for the following year.
Okay, perfect. Thank you for that, Martha. And you did leave your information here. So if anybody wants to reach out to you or have any questions that were not answered, they can always either email you or give you a call so they can have those questions answered.
All right, I just caught a little typo here. There is a hyphen between the A and the K. All right, so it's Martha.Garcia not at blockadvisors.com.
Okay, and we'll make sure we put your email on our Facebook page where our event was. That way they can reach out to you either via email or through phone. And if it's not there or if you have trouble finding it, you can always call us here to the chamber. Like I said, Martha is one of our diplomats, so we have her information, and I'm sure she does not mind us sharing that information with our clients. Correct. Thank you so much, Martha, for taking your time today and sharing all this information. I know a lot of people had questions. And like I said, if you have any further questions, please reach out to us or reach out to Martha. All those PPP questions that were not answered, or if you have any more questions, tomorrow we do have our Cash and Coins and Conversations, like I said, with West Star at 11 a.m. and with United Bank at 1 p.m. Thank you so much, Martha. I hope this helped everybody out there. And we'll see you all tomorrow.
Thank you.